For some people, the reason behind feeling broke isn't a mystery. They might recognize an income problem, or they might live in an expensive area, and their housing takes a good chunk of their money. But on the flip side of that, you also have some people who earn pretty good money, what they pay for housing is reasonable, and on paper, what they bring in should be enough, yet they still feel broke. So today we're going to look at how this is possible and what you can do. But before jumping in, this video is sponsored by Money Management International, and we'll talk more about them in a moment. So one reason why you might feel broke even though you make enough is because you haven't adjusted your budget. A clear, realistic budget is really key to any personal financial plan, and I've said this before. It doesn't matter if you make $40,000 a year or $125,000 a year. Everyone needs a budget to keep their spending reasonable to their income. And I feel that a lot of people probably don't need to be told this. If you watch money-related videos or you read personal finance blogs, you already know the importance of one. But one area where some people drop the ball is never revisiting or adjusting their budget. This is something I recommend doing on a regular basis because our expenses can change over time. And not necessarily the big ones like your house payment or your loan payments, which are more likely to remain the same over an extended period of time. But when inflation kicks in, just about everything becomes more expensive. So we start spending more for food, for transportation, for clothes, and other everyday goods. And the increase, it can happen gradually. So you might not even realize how much more you're actually spending until you go back and you review things over the past few months. So if you feel that your habits haven't changed, yet you're running out of money or you have less available cash, it's time to make a few adjustments. If you're spending more on food or fuel, you might have to cut back in other areas like entertainment or recreation to free up money. Another possible reason is that you have too much debt. I believe not all debt is bad, and when it comes to the bad ones, this usually refers to those that aren't making you money or improving your life. And with that being said, credit cards and some types of loans can fall in this category. Having a lot of credit card debt and high minimum payments, that can also explain why you might always feel broke even though you earn enough on paper. And it's not just credit cards. Having a high car payment can also do this. Some financial experts say that car-related expenses shouldn't exceed 15% to 20% of your monthly take-home pay. And that includes everything such as your monthly payment, gas, and insurance. So if you have a car payment, do the math and see where you stand. And if you're over this percentage, consider cheaper options. Likewise, if you're struggling with credit card debt, come up with a plan to reduce it. But depending on how much you owe, getting ahead might require assistance. And if so, Money Management International can help you. This is a nonprofit organization that aims to help people through financial and economic challenges by offering a range of financial education and counseling services. They go beyond simple fixes to provide their clients with the skills and understanding necessary to overcome today's financial challenges, which can set them up for long-term success. Money Management International can be your coach and loudest cheerleader on the journey to repaying credit card debt. Whether you want to pay off credit card balances faster, you're having trouble making payments, or you're dealing with collection calls, when you sign up for a debt management plan counseling session, these experts can review your situation and then recommend a plan to help you make real progress. This is not a loan and there is no credit check. They have relationships with banks and creditors, which allows them to quickly tailor plans for their clients. And the benefits of a plan can include a lower interest rate, reduction of payment time, credit score increase, and it can also help stop collection activity and lower stress over finances. As a bonus, Money Management International also offers financial education and resources on budgeting, buying a house, understanding your credit report, and managing student loans. The process is confidential and you'll receive guidance in a judgment-free zone. So if you decide a debt management plan is a good fit for you, Money Management International is waiving the startup fee for Broken Wallet followers up to a $75 value. So use the link in my description to sign up for an online debt management plan counseling session. You might also feel broke if you're spending too much on conveniences. Now, I'm not going to tell you to stop spending completely on conveniences because by doing so, I would be a hypocrite because there are definitely things that I do and buy every single month to make my life easier. and I don't foresee giving up any of those things anytime soon. Early in the pandemic, I started having our groceries delivered, and to this day, I still do this, and we occasionally do meal delivery services, and I use a mobile car detailer. So yes, I love certain conveniences, especially those that save me time, and I will splurge on these before I splurge on anything else. But although it's okay, it's really about balance and moderation, because too much of a good thing can be bad. And if you try and make every single aspect of your life convenient, it's going to cost you, because convenience, it does come with a price. So one thing you can do is go through your bank statements or credit card statements and add up all purchases of convenience, which will likely include some recurring monthly expenses or subscriptions. And there really aren't any specific guidelines regarding how much of your income is okay to spend on conveniences every month, at least nothing that I could find. But to keep yourself moving in the right direction, if you do decide to spend money on things to make your life easier, make sure that those expenses do not put you into debt, they don't prevent saving money, and also they should not prevent paying important bills on time. And also, you might feel broke if you don't pay yourself first. This is probably one of the top reasons why someone can have enough money on paper and still feel that it's not enough. Too often, people will put off saving money until the end of the month, which means they're paying their bills and doing everything else, such as entertainment, recreation, shopping, etc. And then if there happens to be money left over, they'll move it into their savings account. But as someone who used to manage their money and their savings account this way, even though it might seem like a logical approach, it's actually pretty backwards. Because if you wait until the end of the month, chances are you're not going to have anything left, or you're going to have very little left. You end up spending a lot of your extra money on stuff that doesn't really matter, which can kind of put you into this rut of living paycheck to paycheck. And once you get into that cycle, it can feel as if you're always broke, even though technically there is enough. So if you haven't made savings a priority, make it a goal to build an emergency fund, at least a minimum 3 to 6 months of living expenses. Last year, a survey found that 32% of Americans didn't have enough in the bank to cover a $400 emergency. And of course, when there isn't enough cash for the unexpected, a credit card often becomes the backup plan. So if you want to avoid debt, treat your savings account like a new bill. When you get paid, pay yourself a minimum 5 to 10%. So that's all that I have for you guys today. Don't forget to like, comment, and share, and also subscribe if you like personal finance and you want to see more videos like this. I typically post every weekend, so thank you again for watching, and I'll see you in a few days.